the way we got into it was I was a very much a passive investor first. So anybody that's listening, don't discount the value of being passive, and then don't discount the value of being an active passive. And then the value that you can provide your general partner is massive if you approach it the right way. And I accidentally fell into this. I didn't have my mindset on the exact same process, but now I go, it's a very repeatable process.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here is your host, Anette, Talie.
Welcome to another episode of Real Estate Deal Closers. I am your host, Anette, Talie, and my guest today is Abel Pacheco. Welcome, Abel.
Hey, thank you very much, Annette. I appreciate it. I like the way you pronounce my name too. It feels like that's how my grandmother used to call me, Abel. But yes, thank you very much for having me. I appreciate it.
Super excited to connect with you finally. And let me tell you guys a little bit about Abel because he has a lot going on. Abel Pacheco is a real estate entrepreneur, commercial loan broker from Texas with a proven track record of repositioning properties, delivering quality renovated housing products to market, and delivering consistent returns to investment partners. Abel has experience in acquiring distressed properties, managing renovation, raising private capital, and managing investment properties. He and his wife have invested, owned, and operated income-producing properties and in about $93 million value and about 794 doors. He is the general partner and principal partner in 512 doors and a limited partner in 347 doors. That's a big, big number, Abel. So I am excited to hear from you. How are you doing all this? But let's start with your personal story. How did you get into real estate?
Well, I started investing in real estate in 2008. I think I have a very a typical investor background, as I hear a lot of these podcast interviews, and I am a podcast host myself. It starts with a something in mindset, a paradigm shift, a change. For me, not unlike many others, was a Rich Dad Poor Dad book by Robert Kiyosaki. And I read this book when I was 26-ish. So I was still in college, and I was working, selling cars actually in Corpus Christi, Texas. And I had moved back for a moment. I had wound down one job and picked up that book, and I go, well, I'm doing something wrong. Because actually at 26, I had already ran my first business for 5 years. During college, I sold Cutco knives. So if anybody's familiar with Cutco, it's like you're selling knives, you do in-home presentations, you start with like your friends and family members, and you ask them for referrals, and then you go call people, and they will let you come over to their house and show them knives, kitchen cutlery. And we would do that. That's what I did through college. And I opened my own business, my own office. They asked me to open a Corpus Christi office, and that was my first taste of entrepreneurship. So negotiated 2 commercial office leases and hired staff and paid, back then it was, I put ads in the physical newspaper. It was kind of before everything that we're doing now on the internet. And so anyways, I recruited a bunch of high school and college kids to come work and sell knives. And I did that for 5 years. And that was my first business. But what happened was I was a young guy, so I wanted to have success. I worked like 7 days a week for like 3 years. I don't think I took a day off. And I probably worked like 70 hours a week. It was not a part-time schedule, but whatsoever. I mean, I literally worked 70 hours, and for a nonstop. I never even took the Sundays. And then I stopped, and I said, well, I need to finish school, number one. So I went back to school. I closed that business down. I moved to Corpus. That's where I was from. So I was kind of hanging out with my dad, selling cars. And I picked up this Rich Dad Poor Dad book. and I thought that that's how business owners, I heard the word business owner, entrepreneur, and I imagine working 70 hours a week, 7 days a week for the rest of my life. And I read that and I go, oh, I was doing it completely wrong. I was the individual operator, business owner. There was never a system that I was able to create. The moment that I stopped working, recruiting, hiring, training, that there was no scale to that. And that's why real estate investing, it just made so much sense even at 26. And that's what we bought our first house. I had a few grand and I bought a house immediately, FHA loan, and then I did that for 10 years. I bought single family houses. So that's kind of how I started. But let me pause and see if you have.
That is amazing. I think every entrepreneur had these side hustles. Growing up, I started with selling candy at school, which was not allowed. So it was like a forbidden
Yeah,
business. And then I, sold creative memories, which was like scrapbooking supplies.
yeah.
So it's always been in my blood to have a business, right?
Hmm.
And real
Hmm.
estate is so much more scalable. So absolutely. And that book, Rich Dad Poor Dad, it was the first one that I also read in terms of real estate investing, and
Yeah,
it did change my mindset, and thinking about business in a different way. So we have that in common.
yeah,
Amazing.
very much so. Yeah, I was able to interview Sharon Lecter, who's the co-author for that book. Her name's just not very public, and that conversation was amazing. I got to tell her probably the same thing that you would say, which is why it changed my life, and it's an amazing book. So I know it gets mentioned a lot, but it's definitely
Yes,
worth
it is.
mentioning again.
Yeah, it is mentioned a lot. Like I have to say, like maybe 3 out of 3 interviews mentions the book. But
Yeah,
it is, and the funny thing is like it doesn't really tell you how to do it. It's just like the mindset, right? Like you have to figure out how to do it, but
yeah.
it's just a mindset changer.
Yeah, the next, like your point is perfect, right? Because I remember reading that Rich Dad Poor Dad, and then saying, "Okay, how do I do this?"
Exactly.
Uh, if you've read there's another purple and yellow book, a Rich Dad Advisor book is series, but it's ABCs of Real Estate Investing by Ken McElroy, and actually that was my second book. And so I picked that up and I go, oh, the ABCs, they're going to show me how to buy a single family house. And I'm a 26-year-old kid. They're going to show me how to do that. And then I read all this book and it was like how to buy a $10 million apartment building. And, for 10, 12 years after that, what I would share with anybody is that I had this limiting belief that I could not do that. I was not the type of person that could buy a $10 million building, or I could not raise capital, or there was no way that this 26-year-old guy was going to do it. But I stayed in that 26-year mindset, 26-year-old mindset for 12 years. I just bought a single family house and a single family house and single family house. And at work, we're dealing with these. Then I had moved to an IT sales professional where I'm dealing with Fortune 500 companies. They're spending millions and millions of dollars, literally, multi-million dollar deals that we're signing. But I couldn't put myself into a position where I said, I can go buy this. And so if anybody has a limiting belief about you can do it, you absolutely can do it. You just have to remove that cap from your thinking and realize everyday average Americans, we have the ability and so much freedom in this country. You can do it. Whether you're born here or you're a native immigrant, like you can absolutely make it happen. So just remove that limiting belief and go take action.
Absolutely. And I think one way to help that removing that belief is like surrounding yourself with people that are doing what you want to do, right? Because then you see it like possible. Like I'm the type of person that if I see somebody that I know doing something, I'm like, if they can do it, I can do it too. But if you are not surrounding yourself with people that are doing these things, then you keep thinking that it's impossible until you see somebody that personally doing it, and then you're like, maybe this is possible.
Yeah.
So that's amazing.
The Deal.
All right, so what deal do we want to talk about today?
Well, why don't we talk about the first one, because it was really valuable for me, and hopefully I can share that. So,
Okay,
uh,
before we start, let me ask you something. I just remember a question. How many single families did you have before you bought your first large multifamily?
I got up to about 8 single family properties before, taking the leap on the first multifamily 124 unit deal.
And how
And
long did it take you? How many years
10
passed?
years.
10
It
years.
took me 10 years to buy 8 houses. And that was me and my wife. We didn't raise any capital. It was just saving money. We every 2 to 3 years, in the beginning it took, like, we bought one house in 06. We didn't buy our second house till like 2000, and I don't know, like 4 or 5 years later, right? It took us a while to save up another chunk for a down payment. And then in my professional career, we were making more money. So 4 or 5 years later, she was making a little more, I was making a little more. We could save up a down payment of 30, 40K, something in that area. And we were buying houses in Texas, and they were like 115 grand, 120 grand. So it's pretty inexpensive, but it took a little bit of a while to save it. And then towards the end of the professional career, because we were making more, we were doing a deal like every couple of years, and that's how we got up to 8. And then at the very end, we bought like 2 or 3 houses in like 2 years. But that's what it took. And then I signed up for some education and training, and I signed it up for it in my head, thinking, oh, apartment complexes, I'm going to go buy a building. And I didn't do enough due diligence on the training. I signed up for single family houses, like single family training. And I go, oh no, they're showing me all this stuff. Anyways, I spent all this money and I had to implement it. So I ended up doing in 1 year, we did 10 houses in 1 year.
Oh,
Uh,
wow.
yeah, I needed to make my money back after we dropped 25 G's on coaching. So then
Oh
I
my
I
God.
did all 10 deals or transactions, buy, sell, in one
But
year.
it's, you are bringing a point that is so important. I just
Mhm.
did a presentation for a summit, and I was talking exactly about this education. You got to start with the education, because it took me also 8 years to buy 12 units.
Okay, yeah.
Because I couldn't, I was doing like you. I bought the first one cash, so I took years to save the money. Then I bought it cash. I didn't
Yeah.
leverage. The
Yeah.
second one, I saved money for the down payment, and it took me like a couple of years. In between, I bought my house.
Yeah.
That's why it took me a little bit longer, but still. And then the third one, that's when I started like, okay, you know what? Maybe I can, get a HELOC on my house. Maybe I can do this. So I started doing more creative stuff. But
Yeah.
if I had that education, if you had that education on year one,
Yes.
imagine where we would be now, right? Like we
Yeah.
would have been,
It's
100
it,
houses.
people get caught up in the fact that they have to drop 15 or 20 or 25. That's a lot of money on education. And I remember right before I paid for my first educational class, I go, I don't know if I should spend this 20 grand here, because I could probably just buy another house.
Hmm.
And if I had done that, I may have been at number 11, 12, 13, like you, not where we finally dropped some education and realized, oh, there's a different way to buy 100 units at one time.
Yeah,
So, yeah.
it is sometimes a little bit painful to do that, right? Like but you don't know the value until you do it, and then you see the value.
Hmm.
I would say that start with the free education, because there is so much free education.
Oh,
You
yeah.
have a podcast. I have a podcast. There is YouTube. There is, books that you can get out of the library, even like you don't have to spend money.
Hmm.
But once you know that you are serious about it, if you are
Hmm.
serious about it and you're going to put the time, you can spend some money there, and it's going to really propel you and take you so much faster than doing it by yourself. And now I see the value.
Yeah.
I was very hesitant to spend money on education before. I am not so much right now. Like if I see the value there.
Yeah, me too.
It
Now
just
I
saves
do it for
time. It's a
networking
shortcut.
also.
Yes,
Now I do it for networking also. I'm like, who's gonna be in the room? I'll pay 7 grand to be in that room. But anyways,
absolutely.
it's that's funny.
Absolutely. All right, so let's talk now about this amazing deal, the first deal.
Oh yeah. So it was super awesome. I'm super excited, super lucky to be on the deal in the first place. So there's an important part that I'll cut to the chase. I'll give you the details and we'll kind of go backwards, but it was a 124 unit property. We closed here in San Antonio, Texas. We bought the deal for about a little over $7.5 million, seven and change. And what the goal for this property was, it's kind of like it's a C property in a B neighborhood. It's a pretty good neighborhood with a high average median income, great school district, good high school in the area, and the houses in the area are just they're amazing neighborhoods to live in. So if you can't afford to live there, the apartment complex is right there. Take your kids to school. And anyways, on this property, it was un unlike well, I would say very much like, sorry, every other deal we've done, a value add. So we buy it, we want to bring the rents to market rate, we want to have professional property managers, we want to update the interior units, we want to improve the amenities, and then attract a better tenant base. So that's basically what we did. And we raised capital. I think the capital on it was like $2 million-ish. We probably had a pretty close to 78% or something loan to value. It's been a little while, but we got good terms on the lending. And then we raised a couple $1 million, and there's probably like 30-ish investors in the deal. We syndicated it. It was a 506B, Regulation D 506B deal. For those that are listening, it basically means we can have non-accredited, accredited investors, 35 of them. And on that, I think we had close to 30-ish people, and there was friends and family, and there was three partners total on this deal. One more highly experienced, me first timer, and then probably our second partner was in between, or our third partner was somewhat in between. And the deal initially seemed like so big. I go, God, $7 million. How are we going to raise $2 million? And this is not my partner's first rodeo. He had done this already multiple times, and so for him, calm, cool, collected. Let's put the OM together. Let's put the numbers. I already made the offer. We already got it under contract. It was, I think it was technically it was off market kind of property from the broker. So it was probably on market. We just maybe not completely listed. And essentially that deal was the first one. Now, those are the highlights, right? I think our investors were probably making 16-ish, 17-ish% returns. This was 2019, so we could have a higher average annual rate of return for investors. Now it's getting very tight, but it was a stabilized property, 90%, plus. We still did a bridge loan to get some of the renovation on it, interest only, for a period of like 3 years, probably a couple extensions afterwards. And so that's kind of like this deal, right? But the way we got into it was, I was very much a passive investor first. So anybody that's listening, don't discount the value of being passive, and then don't discount the value of being an active passive. And then the value that you can provide your general partner is massive if you approach it the right way. And I accidentally fell into this. I didn't have my mindset on the exact same process, but now I go, it's a very repeatable process. So I invested with my principal and partner once, twice, and then my wife got in the third time. We used our 401k money from work. We pushed it to a self-directed IRA, and we pushed it there. So you can't invest as a principal with your own money. So I put it in there, and I thought, okay, great. It's out there, and I'm going to start getting some track record experience. But I use that to ask some questions. I use that for some education. I'm invested in my own deals. But I told my partner, Devin, at the time, I was like, hey, I really want to go do what you're doing. Can you just teach me and mentor me and coach me? And he said, no, I don't have any time for that. But if you're an owner, I'll answer the questions you have because you're an owner in the project. And I said, okay, well, cool. Here's my money. And let's go once, twice, and three times. Well, through that process, he said, hey, you've really been taking a lot of education. I see you go to the conferences, so that's pretty cool. Those are valuable. Do you have a website up and a logo and a card, a business card? And I said, yeah, I'm starting to do that. He goes, start doing that now, because you want to start raising capital today, not find a deal tomorrow and then have to raise capital. So I that's what I did. I started sharing my passive experiences with other people and say, hey, this is the deal I just invested in passively, is my first one. And so friends, mainly from work, were starting to ask me, well, how did you get into that? How did you do it? And I started answering questions and explaining. And that was the quote unquote capital raising for me. Those people were the ones that wanted to invest in my first deal. And, that was very valuable. And then along the way, he goes, hey, I think I'm going to start a meetup. What do you think? You want to kind of do this thing together? And I said, absolutely. So I ran with it. I branded it. I invited all my network, social media, and also individual, one-on-one phone calls, tell them to come to this education. It's free. And he was leading the meetup. So I was getting education. I was bringing other people to him. He was getting other investors as well, because I opened up my network to him and vice versa. So now I'm like in the room starting to get education. And also I'm at the front of the stage, even though it started with 6 people. I was still at the front of the room, but 6 and 12 and 15, and became 50 and 60. And then my last one before COVID was like 80 or 100 people. So it was, and being there, you have other people that say, hey, I'd like to invest with you. You're the guy in the front of the stage. So anyways, all of that stuff led up to another partner said, hey, I found a deal. A partner, Levi, said, hey, I found a deal. Would you want to go partner together? And Devin said, hey, man, you're providing me a lot of value. Not in those exact words, but hey, can you raise a capital? Can you come be boots on the ground? Can you come do that stuff? Yes. Okay. And that's how I got the invite to be on my first deal. I didn't find it from a broker myself. I didn't have to negotiate it with a broker myself. There was no existing track record for me at the time because I hadn't done a deal yet other than a passive investor. I didn't have enough net worth or liquidity to sign on a loan, but I'm in this 124 unit deal because of that process. And that's really my first deal, and it's going well today. And we're managing the property. Initially, we had third-party asset management and third-party management. My partner's grown since then. Now he has his own vertically integrated property management company. So it's his company that's managing it, and also asset management. And doing the unit upgrades, and the exterior looks good. And if anybody's watching the video, it's this property here with a couple of these lawn chairs out on the pool. Autumn Brook, and now rebranded as the Mila in San Antonio, Texas. And that was our first deal.
That is impressive, and I think you point something very important. You had an opportunity and you said yes, right? Like, do you wanna? I wanna do this meetup, and you said yes. You were ready to do this. You had no idea how to do a meetup. You've never done it before, and you started with 6 people and grew it to 80. And you provided value to him, like I said, right? Like, you brought your network to him, and now you are the person in front of the room next to him, the person that is providing education. And that's how you create your thought leadership platform. For me, it kind of uh, happened the same way. Like, the leader of the meetup asked me if I could help him with a Facebook group, and that's how I started leading the Facebook group. And then that led to me now hosting the meetup. So for those people that are listening to us, you need to be educating yourself and be ready for these opportunities, because if you said no, he would have gone probably to the next person and offered that opportunity to the next person, but you were there and ready to say yes.
Yeah.
So
yeah, absolutely.
that is awesome. All right, so let's back up a little bit and talk a little bit more about the deal, because you had a lot of things. You had in there a bridge loan, and the down payments and syndication, and all these things that maybe some people don't know. But let's start with syndication. So for those of you guys that are not familiar with syndication, Abel, can you explain to them how it works and how much of the down payment you had to bring? Because you mentioned 2 million, but what percentage of the deal was that?
Yeah, so there's a couple parts. So syndication is basically it's a syndicate is the technical term, and what you're doing is we're partnering with other people all to come together and buy something bigger than what we would have been able to buy on our own. So I didn't have $2 million for down payment, nothing even close to that. So with 30 people though, we do. Everyone put in 50, 100K, and somebody put in, a little more, a little less. All together we can raise that capital. And so there's a formal structure to it. It's an SEC kind of thing. You've got to register, they get an exemption, but nobody has to get caught up in like how it's those. There's a lot of technicalities and a lot of legal stuff in there. There's experts that help you with this stuff. They're syndication attorneys. They do all the stuff with the SEC. They do all the stuff with the states, all the stuff with the partners. They make all the paperwork simple and easy, and that's what they do for you. If you take away all that stuff, it's just, a bunch of us got all together and we bought something bigger than what we would have been able to buy on our own. And that's how we did it. And so the bank was giving us leverage. So the loan to value, I think I put it at 75, 78, somewhere right in there. The bank's willing to give us, which is just mind blowing for a minute. It's a business. It's still a $7 million business that's making income, just like any other commercial retail spot on, building on the side of the street that selling goods, except our good is housing. And it's a $7 million valued property. The bank gives you 75% of that money. You try to go to the bank with any other business model, selling any other goods or services, and see if they'll give you 80% of the 75% of the money that's needed. And they did. They gave us 75% of the money that's needed because they know, regardless of the operator, there's tenants that are in place, they're spending rent. There's 124 of them. The chances are very small that 124 people would ever leave at one time. So regardless of what happens, the property is just going to generate income. And that's what the bank wants, to know that they're going to give money on a quote unquote sure thing. And they do. But that leaves us with, the reason is maybe 2 million and change is the bank gives you a good chunk of that. But then we also had to raise some capital for the improvements. We need a little bit of the improvements for the interior unit, so we put all this money together, and that's essentially the down payment. So it's, finding a lot of like-minded individuals to come together. And, that part could be an obstacle for some people. I don't know 30 people that all have 50K. Well, shoot, neither did I, but there was 3 of us and I knew 6 or 7 and they knew 6 or 7. And my partner had been doing it longer, knew 15 or more. Right. And so once we all kind of come together, it was a group effort, team effort. And that's essentially how we did it. And then, let me pause and see if that answered the question though. Does that
Yes.
help?
Yes. And, for people that are investing as limited partners, the ones that are bringing the money, they are, leveraging your experience or your partner's experience in this case. So if you have the money and you want to invest, but you don't have the knowledge, partnering with a syndicator will give you that experience, right? Like you're going to partner for experience and then you're going to put the money. So that's a great way to start. And so that is amazing. That 2 million is a big raise for your first one. So congrats on that for sure.
Thank you very much.
Productivity hack.
All right. So now we are in the part of the show where Abel is going to share with us his productivity hack. This is the one thing that he implemented on his business that has taken him to the next level.
Yeah. I was talking to Annette earlier about this. So this is a funny one for me. I am probably one of the worst organization people. I'm not very efficient. I can't build very good systems or tools. Sometimes I'm like, there is this thought process though, that I grew up with for years in my professional world. And that was from a company we built at Rackspace. I was there with them as a startup in 2006. The company went from 600 people to 6,000. They went from a $100 million a year business to about a $2 billion a year business when I exited. We went public and kind of exited out gracefully myself. And along that time, what we were kind of everyone hammered into our heads, the top level, the visionary part of it was the culture, mission, vision, was focus on your strengths, not on your weaknesses. And if you can focus on your strengths, like let's say you have an 8 out of 10 at one of your skill sets, one of your strengths, the most positive character traits you have about yourself, you will get so much more productivity out of making that 8 like a 9 or a 10. And it will be more effortless for you to put your time, effort, and energy in the part that you're really good at because you enjoy it. If you're already an 8, you enjoy doing it, you love it. But there's all these other things in your day that are like, they're necessary, that you absolutely have to do them. But you don't like them, you dislike those things, and they just wear on your soul, on your everyday thing. And your skill level is probably really low on those things. Like you may be a 2 out of 10 or a 3 out of 10 because you dislike them so much. You never do them, you don't practice them enough, you don't get good at them. And so that's what happens. So a lot of people will say, well, I'm very horrible at organization, so I need to figure out how to get organized. This is I'm talking to myself here. So what I stopped doing is saying that I don't really need to get organized. As a matter of fact, I need to focus on, I enjoy talking with people, meeting with people, motivating, inspiring, helping others see a bigger picture, is what I really enjoy the most. I love being in groups of like 50 or 60 people. I enjoy being in the front of the room. I like, this, I get super excited by it. But put me in front of this organization thing where I've got to get super specific about every single detail, is something that I'm a 2 at or a 3. So what I do is the productivity hack. I was taught to build a team with someone else that has this high level of attention or detail oriented or all these, the organization part that I may be missing, and partner with them because they're already at an 8 or a 9 in this area. And you know what you do in your 8 or 9 is like their number 2. They don't want to do it either. So the best productivity hack that I have is just partner with people that will fill your areas of the areas that you don't want to do. There's people that will love to do whatever you need them to do because that's what they love to do. And when you two or 3 or 4 people partner up and we're all meeting our every one of our deficiencies, and we're all 8s or 9 trying to get to a 10 in our specific area of expertise, we're just going to crush it. And so that's my productivity app. Partner with the people that will help you fulfill your gaps. You focus on your strengths, they focus on their strengths, and we're all going to cover each other's weaknesses on a team.
Excellent. I love it. It's so important when you partner up to not just partner up with anybody, but like partner with people that will complement your skills, right? That's what you're saying. Like if you are not very good at something, then partner with somebody that is really, really good at that thing that you're lacking. So awesome advice.
Expert tips.
All right, so let's go to the 3 expert tips segment. And today, Abel is going to share with us 3 expert tips on acquiring a commercial loan.
All right. Yes, ma'am. Well, I thought I would share this. Not a lot of people know, or I don't really broadcast it a ton, but here we go, right? So I serve as a loan broker as well, a commercial real estate loan broker. And I help other partners, other friends, teammates, etc., myself sometimes, source our own debt on deals. And essentially for me, that's like, well, there's a $10 million building. The bank, if they do give you 75%, $2,500, $2.5 million loan, kind of like we're talking about, and the loan part of it is, it's kind of like a black box for most people. Like how do I do that? How do I get that much, debt on this deal? Well, the secret is the bigger, the better. So a $3 million property, a $2 million property, doesn't really work. The banks don't like them if they're not at least $4 to $5 million. So it's a contrary to popular belief. The bigger is better in this area, which is kind of feels funny if you're coming from a residential background, whether it's an investor or whatever. You're thinking, well, the bank doesn't want to lend a lot of money because my income is super low and my debt to income ratio is this, and they don't want me to spend more than 500K on a house. Yeah, because it's a single family house, but a multifamily property, the more doors, the more scale, the more income, the better it is, the richer the asset, the more income it's going to generate. So I've got a few rules to kind of look at, or a few thought processes around this loan broker side. And if anybody needs help, you guys can call me directly too. So what the heck do I need to get a $10 million property, $7 million loan? You need net worth on your general partner team equal to the size of the loan. So if you're buying a $7 million deal, the bank's giving us $5 million on it. We need $5 million collectively as a general partner team. When I bought my first deal, I said I wasn't a $5 million net worth guy. Well, neither was actually a couple of our partners. We had a key principal who was a $5 million plus net worth guy. And you need 10% of the loan amount in liquidity, post-closing liquidity, after the loan closes in your bank account as well. So they want you to invest your own money, typically 10% of the down payment. So the $2 million that we raised, they wanted 200K from us. We're like, between 3 people, we could do that. 4 people, absolutely. 10% in the deal, 10% of post-closing liquidity for the size of the loan. So if the loan amount's 5 million, our key principal also needed 500K of cash or stocks or anything liquid, marketable securities. Or between your team, think of 3 individuals, maybe someone's 1.5 million, 1.5 million, someone's 2, and between y'all, you have 150, 200K, then you are qualified as a team to get a $5 million loan on a property. So that's those basic rules are, again, 10% of the loan amount, post-closing liquidity, net worth equal to the size of the loan amount, 10% in the deal, and someone has to have experience at least an hour and a half from the property. Meaning I've got a deal that I've done and we've done one about an hour and a half. You need at least that. It'll go way easier and smoother if you have professional property management. They probably won't give you the loan if you've never done it. Or if you say, I'm going to manage it myself, it's probably not going to happen. You need professional property management, local experience. And if you have those components, you can go do a deal. Now, the other part of this is kind of going back to the team. If you don't have any one of these components, I don't have net worth of $5 million. I don't have 500K cash. I don't have experience. Okay, well, that's what you don't have. Let's focus on what you need. And how do I go partner with people that will help you fill that gap? And if you find one key principal, one experienced person, somebody with a liquidity, now you can build a team. You can go fulfill those lacks with somebody who already has success or has a track record in that area, and y'all can go partner together. And so that's how you get a loan for these deals, even if you've never done one before. You just go partner with the right team, and now you're vetting everything out, and you can go do a deal. You can get your card punched. And the cool part is, once you've done it once, once you've done it twice, and you've done it 3 times, what happens is your net worth starts to grow because you're a percentage owner in multiple deals. Your liquidity starts to grow because you're starting to do well. And now you've gotten a track record of experience as a principal, as a partner, even if you are essentially riding shotgun through the deal. And the more times you do it, the easier it'll get. And over a while, people will start asking you, hey, can you be my track record or experience partner? And people will ask you. And last year we turned down, in 2020, during COVID, I turned down about 6 deals. It's the first time I've had the opportunity to say, no, I'm not interested in being a partner on your deal. And so we did that 6 times because once you get a little track record, people will ask you. And I hope to have that number even grow. And the same thing, I hope to do more deals in 2021 than we did in 2020.
Awesome. All right. This was amazing. I'm excited to hear your progress and what you will do this next year. So for people that want to find you and find your podcast, can you tell us where can they find you?
Yeah, the best place to go is our website. It's got links to everything. It's 5tcre.com, like 5T, 5 talents, commercial real estate, 5tcre.com. And if they go to /invest, you can fill out a form. You can set up some time to talk with me one-on-one. It's got links to our podcast. We do the 5 Talents podcast. We've got about, a good number of episodes, about 140-ish shows. We were able to interview Grant Cardone, Sharon Lechter, a couple other billionaires, which is really cool. And just great individuals. We need to have you on the show as well, Annette. And then,
Absolutely.
just having a good group of folks to get some, education from. And we got webinars, and I wrote a book last year during COVID, so that's on there as well. So happy to share that with your audience.
Awesome. Thank you so much. And for those of you that are enjoying this episode, make sure to subscribe to the channel and share the episode with your friends. Thank you so much.
Thanks, Annette.
This was Real Estate Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.